Hello, and welcome back to Alpha Index, the channel where we explore the hidden wisdom behind building lasting wealth and financial freedom. In today's world, we're taught to put our trust in a system that often works against us. We're told to save our money in the bank, where it's safe. But is it really? While the numbers in your account may tick up slightly from interest, the real value of that money is silently being eaten away. Inflation acts like a slow, invisible thief, steadily eroding your purchasing power. What cost 100 a year ago might cost 105 today, meaning your money is worth less, not more. Today, we're not just going to talk about assets. We're going to dive into the core principles behind true wealth creation. We'll explore 6 timeless assets that don't just protect your money but can turn it into a legacy that lasts for generations. Principle 1. Value is found in scarcity and utility. First, let's talk about things that are truly valuable, because you can't just create more of them. We're talking about precious metals, gold, silver, and platinum. For millennia, these metals have been a universal store of value. Why? Because they are rare and have practical uses. Governments can print endless amounts of currency, but they can't create more gold out of thin air. Think about it like this. If you held a silver coin from the Roman Empire, it would still hold tangible value today, not just as an artifact, but as a physical commodity. Today, gold and silver are often seen as a hedge against economic uncertainty and inflation. While the paper money in your wallet loses its buying power, precious metals tend to hold their value, and often, their price in dollar terms goes up as the value of the dollar goes down. For those who want to get in on this without buying and storing physical bullion, you can gain exposure through ETFs, exchange-traded funds, that track the price of these metals, making it easy and affordable for anyone to start. Principle 2. Invest in the building blocks of progress. The second principle is to own the materials that power our world. Beyond just precious metals, the demand for industrial commodities like copper, lithium, and cobalt is exploding. These are the raw materials of the future. They are the essential components for everything from electric vehicles to renewable energy systems and advanced electronics. Consider copper. It's not just a metal, it's the nervous system of modern society, found in nearly every electronic device and building. With the global push toward electrification and sustainable energy, the demand for copper is only set to increase. You can't build a Tesla without cobalt for its batteries, or a solar farm without copper for its wiring. This makes these materials fundamentally valuable. Since most people can't buy and store tons of raw materials, the most practical way to invest is by owning shares in the companies that mine and process them. Look into major mining companies or mutual funds that focus on the materials sector. These are often great long-term bets on the future of global development. Principle 3. Seek out stability in a turbulent world. In a world full of political and economic instability, where do you put your money? The third principle is to seek out geopolitical stability. This is why the world's most sophisticated investors have long trusted currencies from countries with a rock-solid economic foundation. The Swiss franc is a perfect example. Switzerland has a history of political neutrality and a stable, powerful economy. Because of this, the Swiss franc is often considered a safe haven currency. When global crises hit, investors flock to the franc to protect their wealth from the turmoil. This flight to safety drives up the value of the currency, rewarding those who held it. This principle extends to all stable, dominant currencies. By holding these currencies, or investing in them through a forex broker or a currency-focused ETF, you are essentially betting on the long-term stability and strength of a nation. Principle 4. Your money is only as strong as the government that backs it. Since the gold standard was abandoned, the value of our currency is no longer tied to a physical asset. Instead, it's backed by the full faith and credit of the government that issues it. This brings us to our fourth principle: sovereign guarantee. A government's ability to tax, regulate, and maintain a stable economy gives its currency value. By extension, a government's debt, its government securities, is considered one of the safest investments you can make. When you buy a treasury bill or bond, you're lending money to the government, and they promise to pay you back with interest. This is a powerful tool for preserving wealth because a stable government is the last entity to fail. The US Treasury, for example, has the backing of the most powerful economy in the world. For retail investors, this is a great way to earn a steady return that outpaces traditional bank savings, and it's backed by an almost non-existent risk of default. You can easily access these through services like Treasury Direct or through the secondary market. Principle 5. Invest in real businesses, not just trends. While many investors chase the next big trend, true wealth is built on a different principle: investing in real, enduring businesses. This is the idea behind value stocks. Unlike high-flying tech stocks that promise huge returns but carry huge risks, value stocks are from established companies with strong fundamentals, proven business models, and a history of steady performance. Think of companies that provide essential products or services, things like power, consumer goods, or basic industrial materials. They may not be flashy, but they are the backbone of the economy. These companies often pay consistent dividends and have a built-in demand that doesn't disappear with a market downturn. They are less volatile and offer a more stable path to wealth creation. For those who find it daunting to research individual companies, a fantastic alternative is to invest in dividend-focused mutual funds, or ETFs. These funds professionally manage a portfolio of stable, dividend-paying stocks, providing you with diversification and steady income without the stress of picking individual winners. Principle 6. Own what can't be replicated. Finally, let's talk about the original, and perhaps most timeless, store of value: land and real estate. It's the ultimate scarce asset. They aren't making any more of it. As the global population grows, so does the demand for homes, offices, farms, and industrial space. This simple truth makes land a foundational asset for any serious wealth-building strategy. Owning a physical piece of land, a rental property, or even a commercial building provides tangible value. It can be a source of passive income through rent, and it often appreciates in value over time, serving as an excellent hedge against inflation. For smaller investors, a great way to get in on this is through a real estate investment trust, REIT. A REIT allows you to own a share of a portfolio of income-producing real estate without having to buy and manage a physical property yourself. Each of these 6 principles is a powerful tool for preserving and growing your wealth, not just in numbers, but in real, enduring value. Remember, true wealth is about building a foundation that can withstand the test of time. If you found this video insightful and want to learn more about building your own financial legacy, please give this video a like, share it with a friend who needs to hear this, and subscribe to Alpha Index for more hidden wisdom on finance and investing. We'll see you in the next video.